Hi, I'm Chris Thorpe. Jennifer Slinkard and I have created this comprehensive presentation on property tax in Texas to help small business owners understand how property tax will affect their decisions. We will be discussing the property tax process in the following steps: appraisal district duties, budgeting and tax rates, exemptions, the protest process, payment calculations, and tax collections. While Texas ranks second nationally as a best tax environment for entrepreneurs and small businesses, it also ranked low in the category of state and local property taxes, with a ranking of 38th nationally. Due to this ranking, it is imperative that potential small business owners in Texas consider property tax ramifications in their business strategy. To begin with, we will review the Texas Constitution's basic property tax rules. First and foremost, taxation must be equal and uniform. Generally, this means that all property must be taxed at its current market value. While this is not always true, as cost and income can be factors on how property is taxed. Each property in a county must also have a single appraised value. Further, all property is taxable unless federal or state law exempts it from the tax. This means that you should begin with the assumption that all property is taxable. Property owners also have the right to a reasonable notice of increases in your property's value. All of this we will go over in more detail further in the presentation.
As Chris mentioned earlier, we'd like to break down the tax process for you into a step-by-step evaluation. The first we'd like to talk about are the duties of the appraisal district. There are several appraisal districts across Texas. The first objective of each appraisal district is to compile a complete listing of all applicable district properties, including the name and the address of the property owners. Many appraisal districts are low on funds, so they use something known as the mass appraisal method to estimate property values. Implementing this means using recent data regarding property tax sales in the area to compute typical values. Although there are three main methods used for common appraisals. The first is the market approach. The market approach compares a piece of property to other similar, recently sold properties in the same geographic area. This approach estimates a selling value for the property on the given date of January 1st, and it has more applicability in many appraisal districts. It's a sought-after avenue if the property turnover rate in the area is rather high. However, in some areas, turnover rate of property is not high, and so two other approaches can be used. The first being the income approach, which asks, what would an investor pay in anticipation of future income from the property? The second is the cost approach, which asks how much would it cost to replace the property with one of equal utility. If the appraisal district expects a planned rise in appraisal of a property, they must give notice to the property owner. There are two types of notices that they can deliver: short and detailed. The detailed notice, which as the name suggests contains more detail than a short notice, must include a property description, its corresponding value, qualifying exemptions, as well as an estimate of taxes owed. The short notice includes all of the above, but does not include an estimate of the taxes owed. Also, a topic in this is a rendition. A rendition is a property tax law form that must be submitted to the appraisal district by the property owner, declaring the location, description, and estimated taxable value of their property as of January 1st of the relevant year. The appraisal district will keep any submitted rendition data strictly confidential, and it is to the taxpayer's advantage to file a rendition because it will ensure a proper mailing address on the record and will also provide the benefit of notification if the appraised value assigned to your property digresses from the value submitted on your rendition. Step 2 of the tax process involves budgeting and tax rates. Tax rate origination begins with taxing units, small governing bodies inside each appraisal district. First, they must decide what their budget is for the year, and then they can decide how much taxes needs to be raised to cover the public expenditure responsibilities. The four typical governing bodies are school districts, cities, counties, and special districts. So here we have the College Station School District, Bryan School District, Bryan, and College Station as cities, Brazos County, and then special districts which apply to unincorporated areas outside of the city. Property tax rates for each body have two components. The first is M&O, or Maintenance and Operations, which is for the general operations of each governing body. The second is interest and sinking. For any debt that has been taken out by each of these bodies, they have the interest and sinking portion of their property taxes raised, which helps service this debt. Texas school districts rely heavily on local property taxes as a source of funding. As you can see on the chart, over 36% of school districts' fundings came from local property taxes. Specifically, the school district of College Station has ample property tax revenue. In 2010, College Station Independent School District raised just over $57 million, almost $58 million in property tax revenue. As a percentage of their total revenues for the school district, this was 79%. As you can see here, the pie of where the revenue goes mainly to the campus level faculty and staff salaries. It also goes to maintenance and operations, transportation, central office staff, data processing, and extra and co-curricular activities. Just like College Station Independent School District, Brazos County also implements a property tax. The primary source of revenue for Brazos County in the past 3 years has been property taxes, and they gained 4 times as much revenue from property taxes as a county compared to sales tax revenue. In 2008, just over $41 million, in 2009, over $47 million, and in 2010, almost $50 million were raised in property tax revenue for Brazos County. So what does the county use these property taxes for? General government, the justice system, law enforcement, juvenile services, public transportation, public health, human services, and debt servicing are just a few. And now onto the cities, who also use the one appraised figure to get their property tax from. So what does the city of College Station use property tax funds for? Public safety needs. The M&O cost associated with Fire Station Number 6 on University Drive, or providing additional resources for the police department, such as those motorcycle vehicles that we all love so much. In fiscal year 2011, the property tax rate was 44.7543 per $100 of assessed value. And also for fiscal year 2011, the property tax revenues were over $12 million. So how does this compare to Bryan? What does the city of Bryan use the property tax funds for? Public safety needs as well, such as fire and police protection, public works, their municipal court, and their parks and recreation. And the property tax rate in Bryan was 63.64 cents per $100 of assessed value. And the property tax revenue was just over $15 million. As mentioned before, there are 4 taxing units that typically exist in each appraisal district, which implement a tax rate and collect property taxes. The first, school districts; the second, the county; the third, cities; and the fourth, special districts. The most typical special district is the Emergency Services District, which is a political subdivision which is entrusted with providing emergency medical and fire services to many unincorporated areas of the state. So what is an unincorporated area? It's not chartered as a self-governing village or city, like that of Bryan or College Station, and it lacks the tax, police, and other powers which are granted by the state on incorporated towns. So this appraisal district has 4 ESD areas, and the tax rates are listed below. They're not very high compared to other taxes, but they're just enough to provide for the emergency services that these areas need. So now in the tax process, we'll talk about exemptions.
The form of a property tax break is an exemption. An exemption lets a property owner ignore a certain amount or percentage of their land's value for tax purposes. Within the general subset of exemptions are 3 major areas such as agricultural, renewable energy, and charitable organization exemptions. A few specific exemptions that may be relevant to businesses include the following: the homestead exemption, charitable organization exemption, and the pollution control exemption. The homestead exemption can be particularly useful for a small business owner that works out of their home because it is available on their principal residence only, includes up to 20 acres of land, and deducts 20% of the property's value from tax. Meaning that if you have a $100,000 property, it is valued at $80,000 for tax purposes. It is also a relatively short form, 1 page, and relatively automatic if the form is filled out. Additionally, school, county, and other homestead exemptions are available on a local basis. The charitable organization and pollution control exemption are just two of the many exemptions that the state of Texas offers. Each has several requirements, such as listing what the charitable organization is or how much of the business is involved in charitable organization or pollution control. These requirements allow the exemptions to range from 0 to 100% of the value of the property, depending on the specific exemption or how much of the exemption you qualify for. More important than understanding these two particular exemptions is knowing where to find the exemptions that are applicable to your business. All of the exemptions are listed at the website that you see before you. Next, we will go over the protest process.
So what happens if you receive your property appraisal and you're not happy with it? Before we can talk about the protest process, we need to talk about the Appraisal Review Board. The Appraisal Review Board is a panel of impartial citizens. They're selected by each district's board of directors, and the board of directors is chosen by each district's taxing bodies. The Appraisal Review Board serves as judge and jury in protest cases. They characteristically do not maintain their own office or staff, and therefore meetings are held at the appraisal district's office. Meetings are open to the public, and the Appraisal Review Board has the ability to grant hearing postponements for protesters, which will give you time to gather your information and talk to the right sources before you bring your protest before the board. However, if you don't get a postponement and you don't show for your hearing, then you lose your ability to protest your appraisal. So what do we need to know about the protest process? Hearings are granted before the ARB, and notice of hearing date and time is sent 2 weeks prior. It's set up more like a courtroom. The Appraisal Review Board is the judge and jury, and the protesting property owner is facing off against the district's chief appraiser. So as the property owner who's protesting, you must present evidence before the ARB regarding whatever circumstance it is that you're protesting, which typically is high appraised property value, unequal comparison to other district properties, denied exemptions, disallowed agricultural appraisals, documented property or property owner is incorrect, or no receipt of notice from the ARB.